Hey everyone, this is Patty XRP here, taking my first little foray into creating a video for YouTube. So we'll see how this goes. Hopefully you guys find some value. We're going to cover basically what are the mechanics of minting an F asset on the Flare network. So we'll also touch on a theoretical example of how the rewards are delivered, and then also like what is your opportunity cost and risk. So, a lot of people, they want to know what the risk is and everything with minting F assets. So it's a twofold thing. There's opportunity costs and then there is a little risk. So let's just kind of break down the difference between these. The key difference is that risk compares the actual performance of an investment against the projected performance of the same investment, while opportunity cost compares the actual performance of an investment against the actual performance of a different investment you could have done. So we'll see how this plays in when I get into the example later on, but just keep that in mind while we go through this. So right now, the four integrated F assets are XRP, Litecoin, Dogecoin, and Stellar. Possibly see Cardano in the future. And then, a lot of speculation around Bitcoin. We'll have to see if they integrate that before launch or it comes out to a governance vote by all the Spark holders after launch. So cool. And this is all on our website, the DeFiStandard.com. We have a ton of stuff covering Flare Network, especially, and there's diagrams and everything that can be helpful. And we'll go through some of those here. Cool. So in this example, we're going to use creation of FXRP on the Flare network by minting 100 XRP into FXRP. So here's a diagram that we put together for this. Basically, the person that is minting FXRP is called the originator. And then on the other side of this kind of transaction or position, whatever you want to call it, is basically a dynamic pool of agents. And the reason, we're describing it this way is because in reality, you're not just going to be like, tied to a single position with one other person or party on the other side. There's going to be multiple agents, providing Spark as collateral on one F asset position. So this kind of allows the system to be fluid and people can move in and out. And I just think makes it more robust in general. So to start off here, basically what will happen is if you want to mint FXRP, you'll deliver a small, basically it's like a reserve. So reserving your spot within the collateral system so that an agent or multiple agents can provide you with Spark as collateral. And then also the originator is going to have to pay a creation fee of 5% is what we're using here as an example from the blogs. Hugo has said on their Telegram in the past that they may do a bidding system and that the creation fee will probably be lower than 5%. So, that's good news to you if you're minting F assets, while agents, yeah, they may get a little less, but we'll have to see how that shapes out as we get closer to launch. So in this scenario, 5 Spark is going to be equal to 1 XRP. The collateral requirement is 2.5 times the value of XRP. And then the reservation fee is 0.1% that's paid out in Spark, and that's of the total value of the F assets you're minting. So what's going on here? Basically, the originator is going to mint 100 FXRP, and that 5% of that is 5 XRP. So that's what they have to deliver to the agents in this situation. Now, when you deliver your XRP to the agents on the XRP ledger, there's no locking up of it or anything like that. So, they could use it if they want to earn some interest through, whatever product or something like that. They're able to do that. But the thing is, they're going to have to answer redemptions really quickly, and they're at risk to losing a lot of money if they don't do so. And we'll get into why that is later on in this. But basically, they're probably always going to be keeping a good amount of it on hand to honor those redemptions. So I wouldn't worry too much about them running away with it, as there's ways to pay you out just in case something bad happens to you. But I'd say those are like outlier scenarios that shouldn't be common. And then to get onto the Flare network side, we're going to see the agents are going to have to post 1,250 Spark as collateral for the 100 FXRP to be minted, and then those will be delivered to you for use on the Flare network. And the nice thing about that is once you get FXRP or any other F asset, they have rewards pools that will be delivering you more than likely on a daily basis. We don't know the exact mechanics of that yet, and we'll get into that in our example later. Cool. So hopefully fairly straightforward here with the F asset system. And then if you go down to the next part, this is what a redemption would look like. So you as the originator kick it off, you deliver 100 FXRP back to the F asset system. And then if the agents are done providing Spark, that would be given back to them from the collateral system. They could keep it here and let it be used to create another FXRP position. And once you deliver it back to here, it gets rid of the FXRP, so it's no longer in circulation. And then on the other side of the XRP ledger, these agents would deliver your 100 XRP back to you, and now you've closed out your position. You've gotten whatever you've done, you've earned from the Flare network by having that 100 FXRP, plus now you get your XRP back and you're just on the XRP ledger. So this is probably the simplest part of it. And yeah. Cool. So let's say XRP goes up in price really fast and people are worried that, oh, these agents are going to run away with my XRP and I'm not going to get it back. We'll cover what exactly goes on here and how your value is not at risk. While yes, you could not get that XRP back, you would be paid out fully in Spark, which would be at the same value plus a little extra. And that would allow you to then go and trade it, you know, like maybe on Flare Swap, and you could swap your Spark for FXRP, or, you know, you could go to a centralized exchange and then do Spark to XRP if they're providing that set. So basically right here, we're going to say that there's a redemption failure on 50% of your 100 XRP. So just like the last scenario, you deliver your 100 FXRP back to the F asset system, and the agent only delivers you 50 XRP back because XRP went to the moon and they decided they wanted to buy a Lambo with the other 50 XRP. Really bad decision by them. They're going to lose out a lot, and we'll show you why here. So in this scenario, the agent's collateral was 1,250 Spark, and this is assuming that Spark keeps up with the value of XRP. So we still have that same ratio between the two assets. And basically, they're going to deliver you 252.5 Spark to make up for the 50 XRP you lost. So that's 50 times 5 to cover that cost. And then also you get a little extra Spark on top to pay for trading fees or, you know, moving around just to make sure you're not losing money here. So you're fully protected. You have the same value. 50 XRP plus 252.5 Spark would give you the same value as 100 XRP in this scenario. And then what happens to the agent is they're only getting 498.75 of their original 1,250 Spark and collateral back. And then they also get 50 XRP, which is worth about 250 Spark. So you can see how they're underwater now compared to what they originally have. And the remaining Spark that's not delivered back to them is going to get burned. And that's basically their penalty, which is around a 40% haircut on average. You know, it's a formula, so it's not going to be like exactly 40% every time, but it's right around that. And we can see here that this burning part happens. The F asset system burns half of the agent's remaining 997.5 Spark in the collateral pool, resulting in that 498.75 Spark delivered to them. So they get this 40% haircut. So they lost a ton of value here. 50 XRP plus almost 500 Spark is about 60% of the original value they had. So you can see how every incentive is there for the agents to honor redemptions. So, you know, if you're worried about them running away with your XRP, you're at least going to get paid out fully. And then also the other part of this, though, if you're not paying attention and you go 2 weeks without checking and you had a position defaulted on by an agent, well, the XRP price could keep racing up, and you would not be doing as well in that situation. you kind of want to go and buy it back immediately when this happens, just to make sure that that value stays the same. So that last part is on you. And if you're not planning on paying attention, then you need to keep that in mind, that there is that little like issue there. So yeah, that covers basically 3 of the main scenarios. And from there, let's take it over to an example of like, how do you calculate the rewards you would be getting, and would you have been better off just holding XRP in a scenario versus minting FXRP and earning Spark rewards? Cool, so this is right here. This is just based on formulas from the white paper and doing just some theoretical examples. Like I'm not promising you that any of these rewards or this is exactly how it's going to look like. We have to make our own assumptions right now because we don't know everything that's going to happen when the network is live. So just take that into account. And also there are 2 rewards pools for minting F assets. There's one exclusively for FLTC. This does not include that pool in this example. And then the other F asset, which is the F asset general rewards pool, includes FDoge, FXRP, and FXLM. Cool. So to get into this, basically right now we're estimating that the F asset rewards pool will be about 20 billion, and this side right here is in millions just because the numbers get really big. Looking at a bunch of commas to read billion, so that I find this easier. But yeah, so we're gonna say the daily rate that this the Spark from the rewards pool is delivered is 0.1%. We're speculating on that. We have no idea what it will be really at this point. And then we're gonna say that the user has minted in total between FDoge, FXRP, and FXLM $100,000 worth of F asset value. We're going to say they do this all in XRP for the simplicity in this example. And then the total amount of F asset value that's been minted between those 3 is 5 billion from everybody else, including our user in this scenario. And then we're also going to say that the total F asset value growth is 1% daily moving forward. So you can see here, this is going to calculate your compounding Spark rewards over time, and then also calculate what the exact daily reward is. As this total F asset value grows while yours isn't, you can see your reward's going to decrease over time. So on day 1 with these numbers, basically you would be earning 400 Spark in yield from the F asset rewards pool. And then if we go down, let's say you hold this position for 30 days, you would have, let's see, what is that? 10,400 Spark earned. So that's a lot of Spark earned. That's kind of, why we're excited to see how this shapes out and what the actual numbers look like when we're live. Like I'm saying, this is just a theoretical example. So we'll see how it's, how it acts in a real live market and where the value flow is. So to get into the next part of this, so we need to calculate what was our opportunity cost for basically paying a 5% creation fee with our XRP, and then what is the, what is our break-even point, and how much did we actually earn in dollar value? So at the beginning of this, we're going to assume that XRP USD is $5 and that XRP price is growing 1% daily on average for these 30 days. And then we're going to say the Spark USD price is $1 with Spark growth at 2% daily. Pretty arbitrary numbers here. Don't take too much into it. It's just to give an example. So we can see at the end of 30 days, XRP is worth $6.67 and Spark is worth $1.78. And then this will play into our final calculation, which is going to tell us what is the break-even value you need to surpass in order for you to be making money on this. And that's going to be, let's see, $5,000. So 5% times the $100,000 worth of F assets you minted would mean you pay $5,000 worth of creation fee. And then the opportunity cost is, what is that 5,000 XRP times, let's see, All right, awkward pause there. I thought I did something wrong in this model, but it's working. It's all right. It's correct. So basically, your opportunity cost is how much is the XRP that you paid in creation fee worth at the end of the 30 days. So it would be worth $6,739 now with some change, and that's what gives us this break even amount. Now, if we look at our gain and loss on this entire thing, we have to take into account how much Spark we earned times what the value of Spark is now. And then we take that number and basically subtract it by the break even value. And you would have made $6,776 in this specific scenario. So hopefully that gives you an example of like, what you're risking, what are the opportunity costs and everything. Obviously, you're going to have to trust that the network is working correctly in the F asset system as well. So, there'll be a security audit coming out on Flare Network here before launch, and then the code's going to be open source. So you can take a look at that stuff if you want, or find somebody that you think is good at looking into it and see what their take on it is. We're definitely going to be paying attention to all that at the DeFi standard. So, stick around for more, and we look forward to seeing how this evolves. I do want to add one more point before we go. So like, let's say you're worried about this opportunity cost and XRP growing by a much higher amount. One thing you could do is if you pay this creation fee, you could go back and buy XRP on the spot market and to repurchase all that 5% you just paid. Now, this means you need additional capital and it's going to raise your break even price, but you would still have exposure to the price movement in XRP in that scenario with like the original amount you had. But yeah, leave some questions in the comments if you guys are interested in hearing more about this, or just something needs to be clarified. I'll take a look at those. And then also, we have our website, the DeFiStandard.com. We, adding stuff on a, I'd say weekly at this point. It just kind of depends on how much time we have, and we hope to keep getting more up there as we get closer to launch. Also, we're making a more like fledged out version of the spreadsheet that is going to be available through the Patreon at some point in the future. I'd probably say like close to a month before launch, but we're trying to, at least give people an idea of what they could make based on different assumptions that you put in. And really, this whole thing is going to be very participation based. So if not a lot of people are participating, then your share of the rewards is much greater. So just keep that in mind. And that's kind of why we see, like, at least from my perspective, if you're willing to be an early adopter, that's the most lucrative point in the Flare network in its existence, probably right at the beginning. So hopefully you guys found value in this, and I'll work on, making some more videos in the future, maybe especially on the mechanics. So I'm Patty XRP, and I'm out.